Hi, everyone. I'm Christopher Thornycroft with Redwood Logistics, and welcome to the Redwood Rundown for the week of January 16th, 2023. So here we are. It's a brand new week of freight. So what does that mean in our world today? Well, everything that we thought was going to happen over the course of last week with capacity opening on up and volume starting to come on down, it's all taking place. The outbound tender volume index is at 10,500. DAT's official numbers haven't been released yet, but our internal recordings of these numbers show that they are coming down in a big way, significant drop off, and we project that they're going to continue to drop off through the course of this week. Projecting for Valentine's Day that there's not going to be a big push of any inventory because of how much inventory is actually probably still on hand from the past couple of Valentine's Day because of all the backlogs that we saw. So very, very, very doubtful that you'll see a real push of freight from Valentine's in anything other than flowers. Reminder, reminder, reminder. I think this is like the third reminder on here, but you're going to see a push of flowers that are coming up from South America into Miami. That's going to really, really, really crush that reefer capacity as we get to the end of January, beginning of February. Watch for that to always come on up and surprise people, everyone, every single year. You mean I can't take this load from Florida to Washington for less than market value right now? Yeah, it's going to be a tough one. So freight volumes for the next couple of weeks, we look for those to come on down. We're into Chinese New Year. The migration of people from where they are in factories in China to where they are visiting families has already begun. That's going to bring down production in a big way. Not to mention our inventory levels are so high that there's not really that need for those imports to come on in. So again, freight volumes probably going to look to drop. Watch for that OTVI to continue to trend on down. Now, what's that going to be in relation to the OTRI, the outbound tender rejections? We anticipate that that will continue to come on down too, just because when there's less freight available, there's going to be less spot freight, not to mention the spread between contract and spot, even with contract rates coming on down in Q1. Those are still incredibly healthy, at least in comparison to the spot market. And we are going to watch capacity start to exit the market. Watch for that to be the headlines that you're reading. Watch for the updates on fleets of 20 or more trucks starting to shut on down, because that represents that mid-level capacity that's so valuable out there. And that's really going to start to eat away at people's ability to provide capacity out in the marketplace. That's all I got. I'm Christopher Thornycroft. Take care. Have a good week.